We are going live right now. It is 5 o'clock, going live at 5. Chris Kamara with the 5 o'clock shadow at 5. Talked about it earlier, looks good. I'm Ryan Dunstan, East Main Street Insurance, Chris Kamara, Cobalt Insurance. We are coming to you with a different time slot. We wanted to get some questions and answers to you. I know that there's a lot of things that are happening in the insurance industry, and with home insurance, we want to make sure that you are well informed, and you've got two agents that are devoting our time, or at least giving you some time so we can answer those for you, because it's hard to get an agent on the phone. I think I heard from someone the other day, and I know I'm a day behind, guilty, on getting back.
Likewise.
Yeah, but it's the way of our market right now. And
Aurora's here. Let me just add her
Aurora's
in.
here. Let her in.
Hola.
Hey, Aurora.
Hello.
Hey, Aurora. Welcome.
We were just going over intros and saying how we're guilty of being a day behind and get back to people, but we want to make sure we're putting time aside for people now.
What do you mean a day behind in getting to people?
I mean, people like email me or call me, and
yeah.
I'm just like, I'm still calling people from yesterday.
Mm-hmm.
Well, mine still says like 24 to 48 hours. So.
Right. That's good.
Yeah.
So if you want to I mean, this is Aurora with Sky Insurance. Here she is.
Hi.
We don't have any viewers right now, but Chris has teed up some topics, and if anything, we're just kind of chatting about state of the market, things that are happening, and putting the content out there. People can ask questions about it later or whatever. But we've had a few guests so far.
There's a guest right there.
Yeah. Did you guys post it to El Dorado County Insurance?
No, but we can, I think.
I can take care of that. Let me figure out how to share this.
Chris was hitting it out to Placer. I think I've hit up Nevada County, El Dorado counties. You good? One thing that I quickly went in to see, just, time and temperature check, is I was looking at rate filings, and I saw this huge, 56% increase for collector vehicles. We're not talking about collector vehicles. I mean, this is house calls, but I see 56%. I'm like, holy cow, that's right up Aurora's little collector vehicles section.
Yeah, but they've been like anything, right? They've been underpriced forever.
Yeah.
So we knew that was going to happen. A lot of tightening up of the antique marketplace.
Yeah. So I saw 6.9 for AAA. I saw 35% for Cincinnati. And
you're talking about Nevada County Fire Insurance Group, right?
Yeah.
No, I was talking about El Dorado County Insurance.
Oh, El Dorado County, yeah.
Did I put it in both or no?
Get all the counties in there. Let's get the
state
senator.
We won trivia again.
Let's get the state senator on the phone.
Okay, so that's Nevada County, and then what was the other one? Sorry. I'm not good at multitasking this afternoon. El Dorado?
Mm-hmm.
El Dorado, which one? El Dorado
County Insurance.
County Insurance. There we go. Thank you.
So yeah, a lot of rates. Just those three specific ones that kind of stood out. Obviously, two are homeowners. The other ones are umbrellas and pet insurance and yada yadas. But people are filing for rates.
Who was it? I mean, SageSure just went up, 47% on average?
Where did you see that?
In their little email thingy.
But then they had a decrease.
They had a decrease. So it all depends.
Afterwards?
Yeah, it was another decrease. So what we're seeing on the street is we're seeing 30 to 40% increases.
Let me look at my goals.
Michael's no longer with SageShore too. Did you know that?
I didn't.
Yeah, he went to another company.
I think next time that I talk with the marketing rep, I'll be like, "What's your business plan? What's your business goal to?" Like, are they should give them on contract for like several years or something.
So the SageShore rate decrease email went out on August 20th.
Mm.
I don't see an email quickly accessible for the rate increase.
That was from July.
From
The
July.
overall rate decrease is 15.3%,
Mm-hmm.
which doesn't make any sense because all we're seeing is doubling. But
I've
I know
seen a few where it's
a
only
rate.
a couple hundred more expensive, so it all is definitely property dependent.
Yeah.
So, I guess on topic, we were gonna start maybe with the most current issue of fire and lightning season. How lightning season has now come around, and it's been pretty crazy. I think being up here, I've had a lot more. I've seen a lot more things coming through Nevada. You know, like the Reno and Tahoe and stuff, and just crazy storms. There's been all those posts with the news carriers of how they're posting all the amount of lightning strikes, and lightning is a covered peril on the California Fair Plan.
It is.
It's separated, you know. So that part is nice. Pretty. I mean, what was? I didn't see what 6.5 was up to. I think it's up to 7,000 acres right now.
So
Yeah,
that-
it's still it just reached 5%, was it?
Containment?
Let me see.
Yeah.
Yeah, I haven't looked at watch duty recently.
There's 0%
Still at zero?
on watch duty.
So that
Six-
dry thunderstorm 2 days ago produced over 9,000 strikes across the state.
Well,
which
and the
caused
interesting
police-
thing that I heard that I thought was kind of like, I don't know, because I haven't heard of lightning fires. It's been a while, but you know, like they'll hit, and then the next day is whenever they could actually just come up and arise. So there's a multiple amount of spot fires that have happened the next day that you got to kind of be aware of, because they'll just sit and smolder, and then if you got the winds that'll come up, and then you have these spot fires all over the place. So definitely something to be watching, I think, over the next week probably as it pops up. But what I think kind of originated, and I brought up to you, Aurora, was the whole like name issue of how they start and what they are, and because yeah, I'd never seen them before, with the numbers and what they were with the whole. Oh my gosh, your dog is just huge now. Wasn't it just like a tiny puppy yesterday?
Yeah.
Yeah, she's a lot.
Yeah. So like it was talking about how they're the battalion chief, like their specific area, and then that's the first number, and then the second number was like the
Severity.
and how they reported to it. So crazy. What else were we gonna chat about? So yeah, the zone fires, Chinese campfire, Don Pedro and the Coyote.
How does somebody watch this? They asked me.
They can watch on YouTube or on Facebook. They're both live. They can.
Where do they go to on Facebook?
I just shared it to the group. So you want to share it to your page as well?
Okay, hold on a second.
I can push it to your page if you'd like.
No, that's fine.
Okay. They can go to Ryan's
That'll work.
East Main page or mine as well.
Or Cobalt, yeah. Yeah, we've got, I think, enough bandwidth. If you wanted us to add one of your pages, we can add it as a channel too.
Oh no, that's
If
okay.
you
Some
want
of
to.
just the people that I was just with asked me
Nice.
because I had to bail.
Yeah. You had to bail.
But we won. That's all that
You
matters.
did. What was the topic?
Tonight was before and after, so kind of like, Wheel of Fortune. So one of them, it's like Jackson 5 something, or yeah, I don't know. We won though.
That's all that matters.
Yeah.
All that matters is that
But
you
now
win.
I cannot figure out how to do this. Why is it not letting me do this?
Here's the link.
Thank you. Share. There we go. Okay. Yeah, so I know you sent me something about ACV or
We heard it mentioned, and we wanted to go
There's
over
been
that
some-
really quickly. So, what are the factors for the FAIR plan that determines if a policy covers at RCV or ACV?
well, mobile home, as you know, is fair market value less
Yep.
depreciation, so actual cash value. But it's fair market value less depreciation, so not like the regular replacement cost on the FAIR plan if you insure for less than 80%, or if your roof is greater than 25 years of age. So that's
And when
just
you say
basic
roof,
cash value.
when you say roof, that's a comp shingle roof, right? That's different for metal and for tile roof.
For the intent and purpose of this podcast, any
Yes.
roof over 25 years of age is subject to actual cash value on the dwelling.
And then the other part that would affect that would be whether or not you have ordinance or law coverage of 10% or more, right?
Correct. And inflation guard.
And inflation guard. So you need all of those. You need the roof, you need insured to value, you need ordinance or law, 10% or more coverage, and inflation guard.
Yes, until you reach 3 million. Once you reach 3 million, the inflation guard requirement comes off, and they'll still give you the replacement cost once they've maxed out.
Okay. So when you hit the total insured value of 3 million for a personal property, that's the max coverage for the FAIR plan, then
Correct.
you don't need that.
Correct.
So sorry, that begs another question. So if you put the whole 3 million into Cov A, that becomes ACV?
If the replacement cost is 5 million and you put 3 million, you're less than the 80% co-insurance value, so you would be actual
You
cash value.
automatically, yeah, gotcha.
Yeah.
What
That's
if-
an important point
As
right
we've
there.
seen in the fires, because the actual cash value won't dip below 3 million on a $5 million home, you're still going to get the 3 million from California
Mhm.
Fair Plan.
Even if the percentage is underneath, like if you're underinsuring it, like you're saying, so if it's a $6 million house,
Because it's actual cash value or policy limits. So if it's a 6 million and the actual cash value brings you down to 5.4 million, but you only have 3 million, they're just going to
Pay
pay
up
out
to
the
the
3
3
million.
million. Yeah, that makes sense.
kind of as a separate note, still the same thing. You've seen other people that have that are looking for the higher value almost put their home in like an LLC or another corporation so that they can get the higher limit.
Yeah, with the it just can't be an owner occupied.
Right.
Because if it's owner occupied, it still has to be subject to that 3 million. So it's only when you've got these high limits or they're doing Airbnb or whatnot, and like the Tahoe and the over 3 million, that you can get away with that.
And another thing that I've seen on now the commercial is that you have to designate whether or not there's an excess policy present. Do you know if Fair Plan will be doing that for personal policies? Like having you say, yes, this is or there is an excess policy. Like, I don't know why they do that on commercial and not on personal whenever the
Because
limits
there's
are
more-
now higher.
Yeah. So currently there's more commercial excess portions of it, but they do recognize the excess as meeting that 80% co-insurance value
Yeah.
on the personal line side as well.
Okay. Do you think that they'll have you like say that it's an excess? Like,
You can show it to them. So if they
Okay.
come in and you can show them your excess policy, and they'll use that as that 80% buyback.
yeah, nice.
That's good. That's more reason for an excess where people are like, it's okay, but they can get the full value of their the underlying policy now.
Yeah. It's
So-
just finding that excess that makes sense.
So expensive. It's like triple the cost of a Fair Plan. It's insane that I've seen.
Yep.
Yeah, well, thanks for bringing that because I know ACV, RCV somehow came up in a group chat, and then I think I've heard. Actually, I had a lender call me today asking about that for some Tahoe closures. They were closing on a house up there, and they've got metal roofs, so they were asking about the whole roof consistency. And yeah, I said as purposes of what the fair plan can do, it's regardless of type, but I think Phil mentioned that they are trying to work on that too, right?
They are, yeah. And the other key thing is to note that let's say that you write a home and it was 24 years of age on the roof, and then upon the next renewal, it's 25 years of age. They're not removing that replacement cost because at the time that you wrote the policy, it qualified for replacement cost coverage.
Oh, wow. Yeah. That's nice.
It is. For a lot of, including even on wood shake roofs, they're still offering the replacement cost.
I mean, it almost incentivizes them to stay with Fair Plan. Like, because I've had a couple of clients that are like, oh, I'll leave and then maybe come back, or they'll go to another client, like an excess policy, and then they get canceled. So then they have to go back to Fair Plan. So yeah, bringing that up too, especially right now.
No, you're correct. It can make a huge difference in whether or not it's a viable option if you have to come back to Fair Plan. Because as we've seen, you guys write SageSure, everyone writes SageSure in here. A lot of those people got a year in SageSure, and now it's cheaper to go Fair Plan than it is SageSure.
Yeah.
And that's going to continue to happen with the E&S markets.
Yeah, we'll save the money we can this year and see what next year brings, right?
Yep.
Yeah, I think that's what Delos is doing too right now. For sure.
And then we have the people that, like we saw with that agent today where we were discussing it. And to me, that's like just straight ignorance because it literally clearly states on that last page, 25 years or age of roof or newer. So that's the other thing that we have. We have a bunch of people, or we have a bunch of agents that are not placing replacement costs on the policy when it qualifies.
Right. Yeah, I got to push for some sort of clearance,
It's funny. We're in an agent group, and someone had mentioned which lenders pay or don't pay for the companion policy, the DIC policy.
Oh yeah.
Literally 20 minutes after that message was sent, I ran into one of those lenders, and I went to the client and I said, hey, there's nothing we could do for you here. You're going to have to reach out to your lender. 5 minutes later, they emailed me back and they're like, yeah, they're not going to pay for it. What is the payment options? So it happened. I know it's happened a few times to me, but it's happening more frequently now. I think there's 6 or 7 lenders, right, that won't pay for the companion policy.
Right. And it should be that way, right? Because the only requirement for the Fair Lending Act is the California Fair Plan.
Mm-hmm.
So lenders have been paying like earthquake policies, they've been paying extra policies, but they're not required to. And it only takes a couple times for them to miss a payment and stuff before they start making the guidelines of we're only going to pay for what's required for our loan.
Sure.
Well, and then I had a lender today and they said, well, we don't like the ACV on the DIC policy. You need to find another carrier that'll do that. And I was like, I had to move into a different carrier from Aegis somewhere else. But I was like, they shouldn't even be concerned about the DIC policy to begin with. Now they're balking about the ACV on the roof. So
on the roof,
yeah, they're definitely going to be stretched thin whenever it comes to actual losses are going to happening, or like what they're doing to clients. I feel like.
So I got a story about a roof I could tell you guys today. So I had a client who got their renewal and it increased about 25%. They asked me to shop. We shopped, found them some savings, kept them back to their original premium, wrote that. They got an inspection done and the carrier says, hey, there's granule loss on the roof. We're going to cancel this policy unless there's a completely new roof. And now we're out shopping, looking for another carrier that may or may not take this roof. And the honest truth is this roof doesn't look too bad, but there's a patch on it. And the carrier sent us a picture of that patch and said, hey, this is it. granular loss and this patch, we're not going to even consider it. Replace the roof or take it somewhere else. And it's an unfortunate situation because there's no way we can know as agents the conditions of all the roofs. So that poor client, we're trying to find them a home now, right? So it's a one-time example I can give where sometimes taking the renewal and not having to deal with another inspection, especially if your home is older, is probably a choice you want to consider.
Yeah, and I mean, you have to also, I mean, as agents, as you know the market, the appetite.
Mm-hmm.
So if you know that Cabrillo, Ryan's favorite, if Cabrillo in, and they're
Are they
super
still around? Are they still writing policies? I don't know.
all the time. We
For
write
my
them.
situation, it was not that carrier. No.
Yeah. But as opposed to Aegis that says, okay, you can go ahead and patch that portion of it, right?
Yeah.
So that's our job as agents, is to go, okay, what is the route? That's why we ask for so many photos ahead of time.
Oh, yeah.
Like, even if they don't need it, we just ask for it because I want to see not the aerial, but I want to see what your home actually looks like today.
Well, and then giving them that first, like, oh, they're probably going to balk at this. You should probably make sure this is done within the next 20 days. Yeah.
That inspection the checklist has changed so much for us and follow-ups by giving that at the front end, because people are like, oh yeah, I have that. And they go through. So, I mean, we're not avoiding everything, right? And we have an agent that does nothing but mitigation for us, but it has helped a lot where we have less stuff coming through. And even that checklist, when they send something, it triggers them to say like, oh no, I could never get that in the order. And then I know ahead of time, switch that carrier.
We've done something similar, not necessarily the checklist you're talking about, but our intake form. It spells out and gets very detailed questions. And if a client doesn't answer it, there's usually something behind that. And we have very few follow-ups. This is one of the few that we've gotten where unfortunate situation happened with the roof, right? But in general, there's gotta be more of that conversation, not just give me your name, give me your address, I'm gonna write you a policy. Those days are gone, long gone. Now they're truly conversations. If you don't know, go to your realtor that you bought it from, that helped you buy it, get more information and save yourself the headache 45 days from now after the inspection comes.
And even, I mean, you guys see it too, where you go in and it can look all great from the aerial, but then you get a message from the carrier that says roofs overhang, like tree limbs overhanging the roof, or roof embankment or debris. And then I have that discussion with them that I say, okay, did you negotiate, or can you negotiate them cutting back these trees as part of the purchase deal or whatever? So that helps with clearing that up. And then just the pre-navigation for our listings, for our realtors to say, hey, this home, you need to cut back this, and you're already going to make it 10% cheaper than another home. So it helps make it that much more affordable to sell.
And that's a big factor. Insurance is absolutely a big factor in new home purchases now.
Are you giving lenders basically the supplemental and saying, hey, these are things that you should probably be having either your buyer or seller look at just to make sure that it's either eligible for purchase? Or
the supplemental, as well as a lot of them will send me photos when they go, their first thing, they go walk around. I've kind of taught them what pictures to take. And then they send those to me and I can say, okay, you're going to want to make sure that this is done or this is done. And like, how much money do they have? Can they close in the eaves? Can they do this? Can they, so kind of walking them through what is going to make this more attractive. And then they have that conversation with their buyers and they put it into any of the offers. Like, we're going to give $5,000 for a roof or $5,000 for tree limbs. So it allows them to position that home already to have that conversation. And they know that we can get that discount for them.
That's awesome. I like that.
Getting ahead of the problem. That's all. Yeah. Awesome.
Yeah. You have to in this marketplace, because these homes are sitting on they're just sitting out there forever.
Yeah.
I guess I'll ask both of you, pull out the crystal ball. It's now been a few years that we've all known each other. And I know I was way off thinking about carriers entering the market. And I
Sorry.
know a lot
I
of
think I
people.
said you're so cute a few times, right?
So looking at that crystal ball, I mean, won't hold you to it, but what do you think? Another year, 2 years before carriers
3.
even
I'm at
close to
3.
entering?
Yeah, we see some. This dog. What is your
It's
issue?
all right.
So we see some that have to come back for the mitigation credits, right? The ones that are going to have to apply. You have Mercury that's looking at how to open up more in some areas, including El Dorado Hills. But overall, it's going to be an E&S market for a really long time.
Yeah.
It just is. I mean, we're not, unless we have a total recall of Prop 103, we're going to continue to see these inflated prices. We're going to see carriers every time there's a fire, pull back. So,
I'm glad you said that. So that segues into the E&S part, right? There's carriers coming in, and there's other carriers that are bringing in new E&S products, but there's no silver bullet, right? Like I see some postings here and there. I've got a carrier. Nobody says what carrier it is, but from my knowledge, there's no silver bullet. There's going to be carriers. There's going to be some variance in price, but we're not going back to the old rates. There's just no way possible for that to happen.
Yeah, and we were correct in our assumption of what that person had, which was Delos, right? It was just that new purchase. I mean, that new program that Delos brought in, or the fact
That's
that they
the Lloyd
opened up
product.
the Lloyd
Yep.
market, right? This person just happened to have gathered a market that we've had for a long time. So we go, oh, there's nothing new out there, right? And somebody else says, oh, well, it's new to me.
Yeah.
So I'm going to put it out there, and I'm going to give this false hope to a community, and everyone's going to call me, and then I'm going to say, oh, no, you're not eligible, but let me BOR your policies, right? I mean, that's just the game that happens in our industry, and we have to know that. But there's also the large number of those consumers that reached out and said, like, what is she talking about? So the consumers are getting very smart.
Yeah, they've seen it happen a few times now.
Are polling right now, so at least that helps on some of it, because I hate to see so many people get really excited and then to be let down. So the fact that consumers are weary of these agent tactics is a good sign.
Mm-hmm. More educated client base, absolutely.
Yeah. And that's why we spend so much time, all of us, right, with these community forums, is to push the information out there so that we keep them informed and they're not in this black hole going, well, maybe.
Mm-hmm.
Well, and that's why I think it's still good to, talk with our agents and then know if there is a product that's coming in. Like, I'm not privy all the time to what AAA is doing, but I've heard that they're really great with packaging some business and that they may be opening up to smaller areas. So, having at least a conversation with a trusted agent, like, oh, maybe you should ask this one agent about this one carrier, this one market. Because I don't, mind referring it out. I know everyone else in here doesn't mind referring it out, and that they're placed not with the Fair Plan, because you're going to get that one agent that is like, oh, this is all there is, sign up with me, and they've got tactics to try and get them on board whenever there might be something in the open market.
Yeah, that's the only option. That's why Fair Plan is under the pressure that they're under.
Yeah.
Is because there weren't enough agents that said, hey, I don't have the best option, but I know that AAA is writing that, or I know that Farmers is writing that. And I think we even fall short in our group setting sometimes as to Farmers or State Farm or AAA saying hey, we're opening up in this region. So we know what we can refer to them.
Absolutely.
As opposed to, them being able to write only, writing Foremost only through Farmers, where we as an independent agent can't. That's huge to be able to send that to a Farmers agent and say, hey, before I go this non-admitted, can you write this dwelling fire Foremost?
Yeah. Yeah, that's what opens up in December. The Foremost one does.
Some of the Farmers agents already have access to the dwelling fire in
Craft Lake or whatever their own thing is. Yeah.
Their brokerage, Craft Lake. And that's the thing about having a large network. There's no way, even as an independent agent, there's no way you have all the appointments. You've got to be able to serve the client by referring them somewhere else to someone that has a market that you don't have access to.
Yeah.
Yeah. And that's initially why I started this, right? Like after the Paradise Fire happened and watching everybody scramble and ask questions, it just made more sense to create the agent network. And as you know, I mean, I think each one of you was probably really skeptical of me at first, right? Like, why is this chick trying to help me? Like, what does she get out of this? Like, what it, you know, and it's hard. There's still a lot of agents out there that would rather drag themselves through it than to trust another agent.
I'm
But-
still a baby. I clamored to try to get into this because you said that question on the panel. So I'm the complete opposite. I'm like, let me in. Somebody let me in.
Yeah.
That's
No,
true.
the amount of times, even as the Fair Plan trainer, the amount of times people are like, but okay, but do I have to pay you? Like what? And like, no, I just want you to do it right.
Yeah, do it right. Yeah.
That's all I want. I want you to take care of the client. I can't talk to 1.4 freaking million people in California, right? But I can talk to 200,000 agents and educate you so that you can write this properly for the community. So if I can't touch each member, then at least I can touch you who can touch that many more members.
Exactly. Yeah, and I think that, I don't know, I feel like most agents do see the value of that we're in this market where we have to educate clients. There's so much education, you know, because everyone is basically just had their policy roll over for 40 years. And we've all heard that story, but there needs to be a lot more educated agents that are helping insureds navigate where to go, you know, and that you sending them to like a Costco or to another farmer's agent or AAA, like they're still not going to be able to write all the business anyway. So, but it's what's right for the client and what they see that, you know, they're going to appreciate that.
Absolutely.
And they for years. I have people that I talked to in 2017 that I said, stay where you're at. Like, this is the best option for you. And they've rode that wave. And then at the end of it, when that wave ends, then they go, okay, well, now what? Right. It's people don't realize that doing right by your community is not a short play. It is, if you just always place them first, eventually it'll all come back around one way or another.
Yeah. Well, that's awesome. I mean, I think that's kind of what, you know, why we wanted to start this, and I think we need more traction as well too. But there's only so much time, and we want to try and get as much information out as possible to ensure, so that way they know, you know, maybe we could get all of us on here as answering like different little side chats or whatever, to try and help navigate people, because I feel like, especially with E&S on the horizon, it's going to be a lot of agents don't even know probably either how to write it or haven't written it for years, and what to do and how to look up maybe who they are in AM Best or what their financial stability is or
how many bonds that they owe back, everything. Yeah. Like that's the scariest portion, is one Lloyd's market is not as strong as another Lloyd's market, and being able to track that down, which, I mean, you're fantastic at, Ryan. I mean, so much of this stuff that I used to like bury into, I don't have to anymore, because you're like, hey, bitch, or sorry. Sorry. But like, hey, did you know that this company is doing this or that?
Right. Yeah. And I liked how one of the E&S markets actually showed which carriers that they were backed by, so that way you could look them up as well. And I feel like that's going to be, that should be a necessity. I feel like if you're going to be writing more E&S in our state, then you should show who your reinsurance backings are, which you can look up, but just to have that more like thing to put in front of the customer of this is who they are, how long they've been around, and how much money they have in bonds and stuff. So, because yeah, there's gonna be a lot of Lloyd's. I looked up that Summit Partners because I was kind of on the rocks of like who they were, you know, just being another syndicate. But then you check out their reinsurances and see how much money they have. But then it's also like saturation play too, because now you're like, oh, well, what other agents I know are in my market that are selling this, and how much business either that they're doing, or if you're referring it to another agent, it's like, well, you know, you can only write on this for so long before maybe
that's an absolute moving target, right? An E&S will come in super hot and heavy, write as much as we can, and then they'll get saturation and shut it down. And then another one will come in and same story over and over, right?
Mm-hmm.
Yeah, that's why I tell it. I mean, and we've had this discussion. That's why I tell customers, like, this is for this year. I'm not guaranteeing you that this is going to be available or
Right.
profitable or whatever for you, but for this year, it makes sense for you.
Yeah, we're going to save you a couple of grand this year. That's the best we can do. We don't like I said, the crystal ball isn't that clear,
Mhm.
and then we'll reassess at your next renewal.
What was that chat that came in, Chris?
Dennis said that I sent him to State Farm, and he's been able to refer me many clients. So he's a little out on some land, and he was getting non-renewed by his preferred carrier, and he was able to get some help with another carrier. Something that I couldn't write, but I could take care of him by sending him to the right place.
One second, I'll be right back.
Yep.
Did you get him to State Farm before the
the
cutoff?
Yeah. Mm-hmm.
Yeah, that's awesome. Yeah, that was a fun time. I think there were so many people that were like trying to navigate where to go, and I'm like we almost had insider information because we knew of the State Farm agents, and we're like, stay there, stay there, stay there.
Yeah.
Like, ride it out as long as you can.
Absolutely.
But that's the power of why you are able to do that. Yeah, 2 weeks, he said, before he was there 2 weeks before they got closed off.
Yeah.
That's crazy.
And he came to me last year, and I said, stay there.
Yeah.
There is no better option.
Did we ever find out where you can find the ballot count on the Prop 103 stuff? I know we mentioned that earlier, but
let me look again. Let's see. I couldn't find anything last time.
okay.
Give me one moment. How many signatures, right?
Yeah. Yeah, because if Prop 103 is able to get overturned or let these carriers have broader brushstrokes and coming back, I don't know. I still think even if you say that it does happen, that Prop 103 is now dismantled for that short amount of time, I think that they still need to file for rates and get them approved. It's not they're not coming in at today's rates, you know. So if you had a crystal ball, Roar, and you saw that it happened in June, like Travelers, that they got the Prop 103 done, do you feel like it would be multiple quarters before they got their rate approved and were able to come back in at a rate that they want, essentially?
They wouldn't need to. It's file and use, right?
Yeah, I think it would be several quarters, if not years, of them testing it like they do in other states to make sure that it actually makes sense profitability wise. A lot of these carriers are actually seeing profitability only because they've limited exposure, right? It's false profitability at this point. But with the Prop 103, at least it gives them the ability to come back in. But what we need on top of that is just like Florida, that says these carriers, you have to go back to a standard market if there's a standard market available, if it's within a certain percentage of the premium that California Fair Plan is offering. That's the only way to thin it out, and as well as going through and really expanding on the I'm not going to make it through this ever without testing. I'm just going to let you know that the not the lottery, the where the companies are going through and they're scrubbing California Fair Plan and sending letters.
Clearinghouse.
Yeah, the clearinghouse, right? Like that has to be like that has to be kicked up a lot. That has to be strategically kicked up, and people being sent out away from the captives, right? So the captives have a ton of marketplace even right now that don't belong in the Fair Plan.
Mm-hmm.
I mean, I have agents from like Stockton that are asking me for options for DIC companies because they're writing the Fair Plan. And I'm like, well, it doesn't qualify for a DIC because there's zero fire danger for it, right? You just you should just stop writing because like
E&S market,
Safeco will take this. Like these companies,
but they're not able to get a new appointment. That's the thing, because they're carriers aren't appointing them.
But that doesn't mean, again, like it
Right.
has to be a statewide initiative by agents to stop saying this is what's best for me in my pocketbook and start saying this is what's best to heal it, right? If you have this short-sighted view, which is how we got here to begin with, right? I remember sitting on agency councils and agents going like, oh no, everybody has a fire hydrant and a fire department within this amount of things, right? Because these carriers 5, 6, 7 years ago didn't have integrated ISO. They still, if there was a question, they allowed us to choose it.
Yeah.
Right? We dictated that. And a lot of agents said, I can win the business if I say there's a fire hydrant when there's not a fire hydrant.
Mm-hmm.
And so these people should have never been there. And then, of course, they burn down. And then they go, well, why won't my carrier write this business anymore? Well, because you just cost them $6 billion in bad underwriting.
Yeah.
Mm-hmm.
So without having that kind of restrictions in place, we'll never heal this marketplace. And I don't know how you do that when you have captives that are driven by corporate to just tell them that that's their only option. I don't know how you combat that.
Well, you'd have to start, I think, with the fair plan, and then you have to vet who's selling it.
Yeah, to your mouth, from your mouth to God's ears.
I mean, you got to start at the source, and you already have all the what is it, the 2 hours or whatever that you do for the training module.
Are you talking about replacement cost?
No. For fair plan, you can go on and you can do several hours and become a proficient fair plan person. So vet them that way.
It needs to be like flood, that you cannot write business unless you have that code.
Certification. Yeah, that would be a crazy start. So I think we kind of snowballed more, but if Prop 103 did go through and they're able to come back essentially right away, I think that's maybe what Chris was saying, but their rates are going to be so high that people may not even leave fair plan because of how high the rates are. So then the clearinghouse needs to come in, and the clearinghouse is going to allow whatever MGA to go out there and say, these are our lists. This belongs here. This belongs there. So the clearinghouse is essentially like the referee of ISO. They're like saying, okay, well, we're going to vet all these addresses to your standardized underwriting guideline, and that's how it goes there. Or they just get every single address.
They get everything. So they just get them, and then they scrub them through to see what they're allowed to write or not. Yeah. Which you experienced, right? I believe it was you that reached out.
And I reached out to that MGA, and I haven't heard back yet. So I'm essentially just, I think, waiting until that MGA reaches directly out to the client and gives it to them. But the other thing is that they just are looking at address. So they wanted more scope of what the business was. Is it a restaurant with live entertainment? Is there woodworking? Is there things that they're not going to want to write on the GL side, but maybe they'll do the property? So, I mean, it's a work in progress, I think, but it's.
When you say the clearinghouse, is that a third party?
It's a scrub system within Fair Plan. So
it's part of the Fair Plan. Okay.
Yeah. So they have each company that is licensed to be able to write business, including the E&S markets. They will get that clearinghouse list, and they'll go through and they'll say, yes, based off the address, we can take this. So they get more information than just the address, but they do have to go through and say, are there claims? Is there this? Is there that? But I mean, I still have yet to have anybody, and I don't remember how many clearinghouse letters there's been, but there's been several, but I haven't had anybody actually qualify for any of those other markets and leave Fair Plan.
Yeah.
So is it a good thing? Absolutely. But do I think that a lot of companies outside of like Delos or SageSure, any of these E&S, do I think that they're really doing their due diligence to find another marketplace for them? No, they don't. They don't want to add marketplace to them right now. That's why there's so many agents that can only write one policy a month with a carrier.
I brought up the clearinghouse to another agent, and he said, well, that's because the whole situation. He's like, that's just not fair. You know, that they can just go in and steal my business and not tell me. And I'm like, well, unfortunately, there's a small print on Fair Plan, and every policy that you bind with them, you are enrolling that agent in for being able to be scrubbed at any time. And I was like, if you want to, you could go to Fair Plan, because there is something that says do not share my personal information, and you can opt them out. Granted, that's probably not the best thing to do, but yeah, you sign away whenever you sign up someone for a Fair Plan that they will be scrubbed, and that you could have your business essentially taken away from you at any time.
And again, we want this as an agent. We don't want our clients on Fair Plan.
Yeah.
Is it a great resource that we have that other states don't have? Yes. But is it the way to heal the industry here in California?
It's never what it was intended for.
No.
And it still says it in all the policies we write. This is supposed to be a short-term solution.
Yeah.
You know, you get your 6th renewal, it's a short-term solution. And we talk about, like, I know you're, like you said, you're a baby in this, right? But this is year 20 something. 30 something.
No, 2000 for property and casualty. So 25 years.
Okay.
On it. Before 2017, I had 2 Fair Plan policies my entire time. That was it.
Where were they at?
2017.
Do you remember where they were at?
Claims. Yeah. So they were both, like, one was in Los Angeles and the other one was in Stockton, and it was 100% based on claims.
Wow.
Is why they went on there.
So that's a great question that's been popping around my head. Is right now, when we quote the California Fair Plan, claims doesn't matter. It's not a factor.
Not right now.
Is that going to and I see it, I see the system set up for it.
Yeah.
Will that factor into rate, or will it factor into eligibility prior?
It'll
claims?
factor into rate later on based off of the perils that Fair Plan offers.
Got it. Okay. But it won't affect eligibility because the Fair Plan is still mandated as the carrier of last.
Still mandated to provide an option, which, like I said, that one client had like so many claims. I think it was like 5 or 6 claims within a 3-year period.
Oh, wow.
And that was the only thing and we couldn't even find them a difference in conditions policy, right? At that point, it was liability.
Mm-hmm.
But then he aged out. So there was enough of them that aged out, and then Scottsdale took them. So I never had somebody more than one renewal on the Fair Plan until after 2017.
Wow.
And those were people in like Fireline 13s that were coming through that had to stay there. And then, of course, Paradise happened. And then.
Well, and they weren't high value either, because at that time it was only $1.5 million, right? Or 1 million?
1.5 million.
1.5 per TIV.
Yeah.
Geez, could you imagine that now?
Right now, you guys.
No.
Anybody with questions, viewers? Now's a great time to ask questions.
Are there people in here? How can you tell?
There's 5. I can see it from the admin side.
Yeah, if you've got a question and you're watching, we've got some of the best in the biz ready to answer your questions. We're just spitballing and talking about how much the Fair Plan has grown, and ACV, actual cash value, replacement cost value. We've talked about rate increases. We've talked
excess and surplus.
What else?
Excess and surplus.
Oh, yeah. Yeah. Lloyd's of London, across the Pond Boys coming back.
And whether or not these E&S markets have the financial stability to pay claims, so their ratings, right?
Yeah. Well,
I took a survey for a carrier today, and they were talking about ratings, and of course, AM Best, Demotech, and then there was another rating agency that I'd never heard of, and it asked me whether or not I thought that was valuable. So I don't remember the name of the other rating agency.
You be talking about Demotech?
No, Demotech and AM Best, I know those two, but it was asking about a third, and I didn't know that name. I wish I had kept it. I don't have it in front of me.
Yeah, I don't know.
That sounds interesting. I wonder if it's an E&S rating company. Yeah, no.
Simple Google away.
That's what I'm doing right now.
S&P Global?
No.
Fitch.
Nope.
Wasn't Fitch?
No.
Shows
So
Fitch.
Very specific.
AM Best, Fitch, Moody's, and S&P.
No, it was right here. Kroll Bond Rating Agency, KBRA.
Bond rating. Oh,
Kroll Bond Rating Agency.
that's interesting.
I'd never heard of it before, ever.
KBRA. Oh, are they live right now?
I put that in there so that
I was like, we're talking about it. They're joining. They're joining up.
no.
That could be. I wonder if CFP's on there.
It says these agencies, along with Demotech, AM Best, S&P, are known as nationally recognized statistical rating organizations and evaluate the financial strength and creditworthiness of insurance companies. So I'd never heard that one before, and from what you guys are saying, I don't think you have either.
No.
Mm-mm.
Do you? I don't know. That's kind of off topic. I was going to talk about the ratings and how, or the wildfire hardenings and how it's going to be changing. I've had more people ask about Firewise communities. I know we were going to try and segue and bring Deetra on because she's doing that. But Aurora, do you know how many people it takes to form Firewise? Is it like 6 or 3? Okay.
Yeah.
3 homeowners?
Just 3 members. You have to have 3 members to start it for the board.
And then how do they designate the map?
They just have to go through and they have to look to see what their boundaries are going to be. How many homes are going to be involved in it. And a lot of times they do that by holding the public meetings and then people showing up to see what percentage of that community shows up, and they can draw that map from there.
Sweet. We talked earlier about
begins, like I think it's good that Placerville kind of combined because there's only so much nonprofit money out there, right? So when you have a bunch of smaller Firewise communities that are fighting for that nonprofit dollars, it makes it less effective. But it's also harder to get larger communities in line.
We were also chatting about the Firewise. Wait, no, not the Firewise. Shoot. What was that? The one that just where it's the whole community that El Dorado got approved of? And then
the 25 that are from last year that's coming up. Didn't
Yeah.
take a month to apply for it.
have you seen any communities? Because that's coming up here in October where they can only apply. That's that short window. They can apply to be the whole community and get the discount.
I'm not seeing it.
Are you talking about the community level? So for
Yeah, yeah.
Placerville?
No,
Yeah.
not the community bubble. What did El Dorado just got approved? Like literally, right before it was 24.
It's from CAL FIRE, right?
Yeah, the one that you go to CAL FIRE and get.
Yeah, but that was for Placerville, not for all of El Dorado.
Oh, I thought it was for. Let me look at the individual ones. The fire risk reduction community.
That's it. Yeah, got there.
So, have you seen any ones that are looking to get approved on that? No.
Not that I've heard out
I
there.
wonder if they know, or maybe it takes time for them to get approved by the board.
But we're not through yet. I thought we had to October for all.
Yeah,
those
it's
applications.
October 5th, I think.
Yeah,
so another
so
month.
we're still a little early to even know who's going to get approved.
Oh, October 1st.
Yeah, it'll get published in October.
Yeah.
Well, and who's what's the date? Is it 12/1 for the community, the separation of the mitigation credits right now?
11.
I didn't watch the thing today with Phil.
Oh, did he talk about it?
He did a seminar today on it. I want to say it's 12/1 again for the separation. So it's tiered. So you don't have, let's say you have everything but the closed eaves, you still get a portion of the credit.
Yeah,
Oh,
I
that's
thought it was
good.
11-1, but I could be wrong. But I mean, I've got the sheet from 23.
Yeah, I have the sheet from 23 too that they forgot they created.
Oh my gosh.
I'm
it's
pretty
just so
sure this
crazy.
is what we're talking about right here for the communities.
Mhm.
So
Yeah.
the
Well, hi,
application
Mike.
period closes. Sorry, what's up?
Oh, I just noticed that Mike popped in here.
Oh, thanks, Mike. I didn't catch that fast enough. But
Fire
what's on
safe
the screen right
community.
now is the application period closes on October 1st in about a month, but they still review it for a long time.
Holy
So
cow.
months. Yeah. And they don't push that out until July 1st of next year. So that's not going to be happening quickly at all.
And that's, I think it's like a 1.5% decrease for the whole community.
I thought it was.
Because I think it's like 1% for each item.
Hold on, let me remember. Let me remember.
I'm just going to stick this in the chat to have it there.
Hills.
So it could be a city account.
Yeah, I have it somewhere. I'll have to look it up
The
again.
sheet? I have the sheet.
For the discount?
Yeah. But I don't remember the actual percentages per each one.
I was going to say, I have it broken down somewhere. I just got to remember who's the fire captain for El Dorado Hills? Ron something?
I don't know off the top of my head.
Ron Phillips. Ron Phillips. Okay, so let me go here.
I might just ask my ChatGPT and find out real quick.
Alexa says she can check hers.
I don't think it's much because they have to take the 15%. They have to spread it out over everything.
And Mike says Mercury will be taking on more risk in El Dorado coming up soon.
Yeah.
Well, yeah, they offer the risk reduction community discount because it was weird because the individual items is finally what's going to help other clients get that other discount that have been needing to have it for, I think, the past 5 years or something like that. Because if there's 30, I think there's 30 communities and they haven't been getting discounts this whole time. So now that
they've been on the list with no discount, yeah.
Yeah, now that it starts in November, December, they'll get something.
Do we know what the total discount would be if everything applied for the fair plan?
25% off the wildfire.
Off the wildfire, right?
Only.
Which that's still huge. I mean, the other ECE and the other one, VMM, and that's normally like, I would say 5% of the discount. 4%, she's saying. Lexus is saying 4%.
It wasn't a whole lot.
So on top of that 25, so you're looking at 29% now total, right?
No, it's 25, but again, it doesn't work out to an equal 25 because every time they do it, it's reducing the premium. So it's not like they go over the total wildfire premium, they go 25%.
Yeah.
They hit the first one and then it's now the second one, now the second one. So
but when you say 25,
right now it's like 14.5% on the two mitigations that are there now.
Right. But you're talking all the mitigations would be 25%?
If you have the structure,
Firewise, the structure.
yeah. So you have Firewise, you have the structure, you have the defensible, you have the
FRRC.
community level. That total is 25%.
Okay.
Crazy. It's something.
It's a lot. I mean, especially some of the other ones, right? If you look at Golden or Gold Ridge, right? That Firewise is not substantial, but if you have Sierra Springs, Now that Firewise credit can be, like $1,000 as opposed to $200 just up the road.
Yeah.
With being a PC10 versus a PC6. So it really helps individuals when you're in those higher protection classes. That's where you really want to focus. And that's where I tell a lot of people, like, you want to invest in it. I know it's hard, right? Because you're paying so much more. But if you invest a little bit in doing the bottom 6 inches and you can do those, then you can reduce that premium quite a bit to make it more affordable.
And more so when preferred carriers re-enter, they're going to want those properties far beyond anyone that hasn't done those mitigations.
Yeah, they're already asked it now.
Mm-hmm.
You have Travelers that comes in and says, well, maybe. And then it says, do they have this, 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 or this? If they don't, then Travelers underwriting comes back and says, well, they need this, and then we'll approve it. Right. Same thing with Mercury on some of these levels when they're just not blanketing. Delos, you see the question when Lloyd's comes in that says, is it not, non-fire related? Like, do they have any fences? Do they have this? They have that? If you answer no, then it immediately says like, too bad, too sad.
Yeah, double pane windows, the deck stuff, being non-combustible materials. So, and that's kind of the cool thing about the admitted carriers coming back, is that they're already starting the framework for building in all these discounts. So that way, whenever they do come back, they're going to say, oh, this is who we want. And I think that's like the other thing of how the Wildfire Prepare, the IBHS, is worked too right now, where there's the Mercury and AAA and Farmers. Like, they're only taking clients that are IBHS certified. So it's huge to even start working with that and putting those into place, but spending your money on that.
Well, and that was one of the downfalls that we found. Like, once we completed that white paper and got the backing, and everybody came in and said, okay, the carriers have to by 7/1 have this built in, right? But then they said, oh, well, if you're going to make us do that, then we only want customers that are this, and this, and they have to have this certificate to do it. Right. So there's always that. Every time we bring legislation forward, we have to go, okay, what is that portion of the insurance community? How are they going to respond? Right. Like, where is this going to push this? And so many times people will call me and be like, this is what we're thinking about. And I'm like, here's why that will backfire. But it's hard. It's hard to create legislation in an over-regulated state like we have here in California.
Right. Yep, it's going to take some time. That's where the crystal ball comes back in. That referencing what is that? What's that crystal ball?
I don't think there is any, right? Because if you watch the history of how Laura responded to this and how insurance companies, and more so, you have to look at the consumer protection, right? Which at this point seems like a joke term to me, because the consumer protection people are the ones that are blocking most of this. They're putting it into courts. They're the ones saying like, well, no, we need to keep this, and we don't want higher premiums. You just have to lose money, right? Like their concept of how the marketplace works, they're blocking it. So the crystal ball is, how do we remove these hindrances, and how do we get them out of the way and just leave it up to those of us who know how to heal the industry? And until that happens, until you have United policyholders and people like that are falsely protecting consumers against something that works in all other states, right? And that's the key thing to say. Like, California should stop being looked at as like this prime changer of the United States, right? Their policies are not working, and especially in insurance right now.
Yeah. What we're doing right now is not sustainable. I mean,
no, it hasn't been sustainable for a long time. I mean, and this is something that, I mean, a large group of us, we started fighting this. Jesus. I think the first time we started looking at changing Prop 103 was 2007, when the bark beetle infestation happened in Southern California.
Wow.
And that was like, hey, we're watching this, right? As a wildfire underwriter for a short portion of time at Nationwide or Allied at the time, what it was, we watched that, and I said, okay, well, Now it's reached Bakersfield, and now it's reached here before I went back onto the independent side. And we said, okay, well, if we don't fix this, then there's going to be no one left writing business.
Yeah.
So I think maybe you guys remember in 2015 or 2016 when I did my first news, and they posted it and it went out to the Folsom chat, and all Folsom chat said this woman is crazy and she's an alarmist and that's never going to happen. There's no way we're not going to be able to find insurance in Folsom.
Yep.
And then those people then came back and they're like, oh, well, now we're here. What do we do? Well,
yeah. Guide us.
So it's something that I don't know that California will ever take the time to look forward thinking to say, how do we prevent this collapse from occurring? They always wait for the collapse to happen and then try to fix it afterwards.
Yeah. And it's going to take, I think it's going to take a lot more time, like you're saying. And maybe some other movement with either legislation or maybe some other weather stuff that's going to happen. But there's always going to be movement. And I don't know what it's going to take, to be honest. Yeah.
I mean, I think moving to an appointed role with the commissioner may not still be the best option, but I think it's better than voting political for this role.
Yeah.
And I think that enough people have finally realized that this role should not be politicized, right? Because it doesn't matter what side of where you're at, your home's going to burn. It's not like the fire is going to stop and be like, oh, you voted for the commissioner, so I'm going to skip your house.
Right.
So it's a matter of really looking at who is the best person with the best background to understand this mechanism, that can have a good conversation with the insurance companies who are looking out for all their constituents, not just their rich constituents. So I don't know how you fix that in California by getting somebody in there. I don't know that an appointment is the answer, just based off of some of the levels of movement that happen within our political spectrum there in California. See how well I did?
Yeah, that was great. No cursing. That was amazing.
There's only like 2 curse words in the whole hour. So.
Man. This is why they hate when I speak. They always tell me at the beginning, like, don't curse. I'm gonna curse.
It's gonna happen.
We have a forum here. It doesn't matter. It's just to help people, and we could say whatever we want towards that.
I remember when they asked me to run for commissioner, and one of the people were like, "Yeah, but," and I said, someone else said, if Trump can get elected, she can curse. And I was like, well, see, that's actually a good viewpoint.
Yeah.
All right, so I'm gonna end the stream now. Okay, guys.
We have to end it. Yeah, I hate to end it. We could. I feel like we could go all night just chatting about stuff.
We've got next week, so I'm sure there's more.
Yeah.
I am on vacation for 2 weeks. So.
Oh no, yeah. Thanks for coming on. We know you're on vacation. I think we have Dietrich queued up for next week.
We definitely want to have you on again for sure.
Yep. Just let me know.
Cool. Thanks so much.
All right. You guys have a good night.
Sky Insurance. What's the whole name? Is it just Sky Insurance?
Sky Insurance / Trucordia.
Trucordia. Yep. Ryan at East Main and myself at Cobalt.
Yeah, congrats on the change in the name.
Oh my God.
Thank you.
I love it.
That was a lot of work. I don't ever want to do it again.
Yeah, trust me, we've gone through it a couple times.
All right, I'm going to end the stream.
All right. Bye, guys.
Bye.